Hey, good afternoon, one and all. Welcome to today's event. This is our Q1 earnings sneak preview. Today's Monday, April 17th. You got John Hopkins here. Tom Bowley going to jump in just a minute. If you're new to EarningsBeats, a big welcome. Appreciate you taking the time to stop in today. If you're, of course, one of our recurring members, but some of you have been with us a long time, we thank you very much for being part of our community. This is really, before I forget, tonight's event will be recorded. Like every event that we do, we've got quite an extensive webinar library for our subscribing members. This is really this week, starting last Friday, when, Saturday, when Tom presented his bullseye forecast. This is quite a week for education and events like this. We've got tonight's event, which, by the way, is open and free to our entire community. Tomorrow night, we've got our Max Options, Max Pain event, which is a members only event, where Tom will be talking about the major indexes and potential companies that could make good moves up or down between now and options expiration on Friday and even into early next week. Just a great webinar, one of my favorite of the month. And then Wednesday, we've got our ETF webinar where Tom's going to unveil the new batch of ETFs for the following quarter. We've had a pretty good quarter, as you'll see if you come into that event. So Tuesday and Wednesday are member-only events. You have to be minimally a trial member to get into that. I do want to mention one thing we've got going because you're with us tonight in the webinar. We had this webinar on Saturday, and part of it was our special webinar special. We get Tyler to pull up that page for me. We'll take a look at it. Basically, this is a tremendous deal for those of you who are looking to get just a great deal. Now, number one, you can sign up if you want for a 30-day free trial, or you can take on an annual membership, which includes 2 bonus months. You're getting 14 months of membership, which just cuts your cost, pretty much in half for the year. So we've decided to keep this open till Friday. You can go right to our site, EarningsBeats.com, where it says webinar special, and to click on that. Great time to do this because we've got all these events coming up. We've got another event coming up next week when we actually get into Q1 earnings. Tonight's a sneak preview. Next week's the real deal for our members, where Tom will unveil a lot of stocks that could make tremendous moves into their upcoming earnings report. So really a great time to take advantage of this for everybody. Anyways, I want to just throw that out there. I want to make sure Mr. Bowley's in the house. How's it going, Tom?
It is going well. How are you doing, John? Good afternoon, everybody.
I'm doing great. I know you've got this one tonight, the next 2 nights, so we're going to whip through this one. A lot of great information, but let me just step aside so you can get going.
All right, sounds good. Yeah, this will probably be a pretty quick, I'm going to try to make it a pretty quick webinar because we do have a lot of events between the shows this week and then the evening webinars and so forth. Going to be a lot of talking. So I'm going to try and get out of this one fairly quickly, but I do want to go through some of the earnings that will be coming out this week. I think it's going to be a really interesting week because if you look through the week's earnings, you'll see that a lot of them are in the financial area. A lot of banks reporting. And of course, that's all we've been listening to here for the last month is how bad the banks have been doing. And many of them, of course, we had a couple failures and wondering what kind of contagion there might be out there. And so as each one of these banks report, it's going to be really interesting to see not just how they did in the last quarter, but what they see going forward. What's their guidance going to be like? Got an inverted yield curve, which normally is not good for bank earnings. And then, of course, with the couple failures and potential fallout, you've had a few folks come out, Warren Buffett, Jamie Dimon, and so forth, saying, hey, this isn't quite over just yet. And so I think these earnings reports coming up this week and next week, maybe some of the best earnings. It could be like a soap opera, I think, but we'll follow it and see how it's going. But some banks are acting a lot better than others, and the ones that aren't acting so good, I'd be a little careful of. We're going to go over a number of those tonight because there will be a lot of banks reporting this week. So a couple of things before we get started. What I try to do when I look at earnings is just take a look at the relative strength. To me, I think that is one of the biggest, best indicators on what you might expect from these companies when they report. You can't lose sight of the fact that Wall Street, and when I talk about Wall Street, people are like, what do you mean by Wall Street? Is that the market? I'm talking about the big Wall Street firms. When I talk about Wall Street, I'm talking about the big firms, the big money. They go out and they talk to company management. They talk to a lot of different companies in various industry groups, sectors, and they kind of make their decisions. Do I want to own Citigroup? Do I want to own JP Morgan? Do I want to own, I don't know, something, that's more regional or maybe a smaller local bank? I mean, they're making these decisions, and the way you see what decisions they're making, and they have a lot more access to data than we do. But the best way to look at it is to watch to see how the relative strength lines up. The other thing that makes this week so interesting is we have options expiring. And as John mentioned, we have an event tomorrow night. I would encourage all of you to come to this. Got some very interesting directional clues that we're already getting in the market based on what could transpire later this week and into next week. And I'm going to talk about all that tomorrow, so I'm not going to spend any time on that tonight. But just know that the market could be in for a little volatility this week and into next. And with all these bank earnings coming and everything else, it's going to be a very, very interesting week for sure. Let me go ahead and show you, because what I always talk about with options expiration week is, for me, I always call it opposite George week. I'm a big Seinfeld fan, and there was an episode where George Costanza, one of the characters in Seinfeld, he's just always, down on his luck, always thinks his life's horrible and never makes the right decisions and everything's going against him. And one day, Jerry Seinfeld sitting there and saying, George, if every decision you make in your life is awful and wrong and turns out horrible, why don't you just come up with your decision and then just reverse it? Do the opposite. And so he looks at Jerry and he thinks about it for a minute. He's like, that's brilliant. And so he ends up thinking about doing things, and then they'll remind him that, hey, that's what that's what old George would do. New George does the opposite. And then he started doing the opposite and things started changing for him. It's a pretty funny episode. Anyhow, in the stock market, everything that's working heading into option expiration week, you got to be careful because a lot of times it'll flip and go the other way. And the same holds true for anything that's not been working. So think about the banks. We're getting a nice little rebound in some of these banks this week, even banks that, earnings and guidance and everything's not so great. Seems like we're already starting to get a little bit of a bounce. And you have to wonder how much of it is options related. How much of it is opposite George week? I don't know. But here I pulled up the sector summary for today, and you can see real estate and financial sectors. These are the two leaders today, the only two that gained 1% or more. Look at their scooters, 36, 36. Look at all the other scooters. Let's sort this. Worst two performing scooters. Well, let me reverse it. But there they are. Financials and real estate leading today. They're the worst relative performers, according to the stock charts technical rank, or the scooter. And yet, there they are, right on top today, right on time. And then you look at communication services and technology, which have been the two best, and there they are down toward the bottom half. It's opposite George week. So got to keep that in mind as you go throughout this week, maybe into early next week. I'm never surprised when things reverse. And if you look at the history of the stock market, I've pointed this out many times, just performance during the calendar month. We tend to do really well at the beginning of the month, and we tend to do really well in the middle of the month. And then all of a sudden, from the 19th to the 25th of the calendar month, we tend to show annualized returns that are deep in the red. This is a solid week of performance every month of every year for 72, 73 years. Hold on one second. All right, thanks. So this is a phenomenon that's been going on for 72, 73 years. This isn't something that I just came up with this week or last month or year or whatever. This has been going on for a long time. And so you need to be aware of if you're a trader. Now, if you're a long-term buy and holder, it probably doesn't make that much difference to you. You're not really paying attention about what happens this week, as long as in the end, things play out the way you think they will or you hope they will. But if you're a trader, oh my gosh, you have to be aware of this stuff. I don't know how you trade successfully without this knowledge. So anyway, we'll talk about more about that tomorrow night, opposite George Week, and what impacts that might have on various stocks and so forth. Tonight, what I want to do is I want to just go through and point out, I went and looked at every stock that reports this week. Every company that reports their quarterly earnings this week, I looked at their chart. And I'm just going to rifle through a bunch of them. I'll go through the ones first that I think look pretty good, decent, where I wouldn't be surprised if we have a good report. And then I've gone through and listed a bunch of them that are negative, and we'll see what happens there. But a lot of them, as you can expect, in the banking area. But let's go ahead and get this thing started. So I'm going to start off on Tuesday with companies that actually, before I get into this, I did want to show you a few companies that have already reported that I think look pretty good based on not only their earnings report, but then also the response to their earnings. So let me go through and give you those first before we look at the really good ones. So I'm going to start off with Lamb Weston. This is a defensive stock. It's in the food products area, so consumer staples. And I mean, it's been just going up, up, up. They reported, I don't know, a couple of weeks ago, you can see the gap up here, the increase in volume, but it just continues to perform really well. It's not a super fast mover, but it's been a pretty consistent mover to the upside. They had revenues of 1.25 billion. Expectation was 1.18 billion. Earnings per share, $1.43. Market was only expecting 98 cents. They came in at $1.43. But you can see really nice earnings gap up there. Really nice earnings gap up here. I think at some point the stock maybe pulls back to the 20-day, but I think Lamb Weston looks really interesting. 3 of the next 4 I give you, there's 4 more I want to show you so far that have reported I like. 3 of them are in the banks, and they're large banks. First one, Citigroup. I'm not sure Citigroup's not the best bank out there right now, or certainly one of them. Citigroup gapped up with its earnings, nice little volume, moved back up above at 50. It's not that far from a 52-week high. And think about the crisis we've been through with all the banks getting hammered. We only need like about 6% more, and Citigroup's at a 52-week high through all of this turmoil. That tells me Wall Street loves the stock, and we've seen the earnings. They just came in, revenues $21.45 billion, expected to be $19.93 billion. So they easily blew away revenues, the estimates. And then earnings per share, $1.86 versus $1.66. Top line beat, bottom line beat. I mean, I think Citigroup looks really good. And when you look at the relative strength, I'm going to pull many of these charts up showing the relative strength. But look at Citigroup relative to the bank index. It is absolutely exploding to the upside. And when I start showing you some of these poor banks, you will see a huge difference. And again, so what that is it's Wall Street or the big Wall Street firms telling me that Citigroup's where you want to have your money, not these other small to mid-size banks that look like they could get clobbered later this week. JP Morgan, I think, is another really good one. JP Morgan, look at that AD line breaking out. Nice gap up there above the 50. Another strong day today. Good volume trends. Look at the relative strength. It continues to do well. So JP Morgan and Citigroup, both very strong. JP Morgan, $38.35 billion in revenues, $35.19 billion was the expectation. So probably 10% beat, very easy. and earnings per share 410 versus 341. JP Morgan's rolling right now. The other one I want to give you is Wells Fargo. Wells Fargo, 20.73 billion in revenue. Expectation was 20.08. And then earnings per share, $1.23 versus $1.15. And if you look, this one isn't as good as Citigroup and JP Morgan, but look at the relative strength. I mean, through all that turmoil, we did see Wells Fargo break out to another 52-week high versus the banks. So yeah, it's not exactly going gangbusters, but it's not being hurt like a lot of the other banks. And when you start setting 52-week highs relative to your peer group, that's generally going to be a stock you might be interested either in owning for the longer term, as long as that relative strength stays strong, or at least maybe consider as a trading candidate in the banking area if you want to step into that fire. The only other one I wanted to show you I thought was interesting was UNH. So UNH, you can see, has pulled back the last couple of days. AD line, not great. So I would say that maybe is a slight negative there. But when I look at the relative strength, the last 3 months, 2.5 months, I mean, UNH relative to the healthcare provider group, just on fire, going up, moving up to a new 52-week high. Volume's been just okay, not a huge volume move. And you can see the overall group, healthcare providers, not been very strong relative to the S&P 500. So it's a weak group, but UNH is, it's kind of like, what is it? The pig with the pink lipstick. That's what it looks like here. Healthcare providers, not a very good group, but looks like UNH has been dressing up. Looks pretty good. UNH, by the way, easy beat, 91.93 billion revenues versus 89.33 estimate. And then earnings per share was pretty close, but they did beat $6.26 versus $6.24. So those are five companies that have reported so far that I think look pretty decent. Are they knocking my socks off? No, because 3 of them are in the banking group. I'm not excited about the banks right now. And one's in food products. I'm not really excited about defensive sectors. And then the last one is also in a defensive sector, UNH, and healthcare providers in the healthcare sector. So I'm not overly excited about anything yet, but that's typical of earnings season because we really don't start to get into many of the growth names for probably another week or two. But let's move on. Okay, so what do we look at? What looks good going forward? I'm going to just kind of go through these rapid fire. First one I like is Netflix. Netflix reports on, actually reports tomorrow. Let me see. Yep. April 18th. And when I look at the chart, first of all, AD line looks beautiful, even with it pulling back. AD line ready and willing, and looks like it may have already hit 52-week highs. So even when we get pullbacks, it looks like they're buying in the afternoon. I like that. Netflix on this first move up, you can see was leading internet stocks. Since it's been consolidating, it's pulled back, and that's fine. That's what normally happens when a stock consolidates. As long as if the group keeps going up and a company takes a breather, it's going to underperform for a period of time. So I don't see anything on this chart that suggests to me we're going to roll over. I see higher highs, higher lows, AD line strong, a leading stock all the way up until the end of January. I'll be surprised if they come up with disappointing numbers. I think they'll come out with good numbers. Now, will the market react positively? That's always the next question. You might have a great report and may have already been built into the highs that we saw back in February. So when I go through and do this relative strength analysis, what I try to tell folks is these are the companies, if they're looking good going into earnings, these are the companies I would expect to post better than expected numbers. Doesn't always mean higher prices. And there, it seems like there shouldn't be that kind of a disconnect, but there is in the stock market. A lot of times you get buy on rumor, you come out with news, which is good. Maybe you have a temporary move up and then right back down again. Really whipsaws a lot of folks. So anyway, Netflix, I think, looks interesting. How about Lockheed Martin reporting tomorrow? I think they report in the morning, I believe. But they're at a 52-week high. AD line still looks pretty good. Relative strength versus defense, awesome. Only problem is defense has been going down. But LMT is one of the leaders. I would expect some good numbers tomorrow. I'll tell you what, if a stock like LMT comes out and disappoints, then you got to wonder about everybody in the defense industry. IBKR, AD line still looks pretty good. Look at the relative strength versus investment services. So investment services has been hit hard along with the banks, but here's one of your leaders. It's kind of like the JPM of investment services, or the Citigroup of investment services. IBKR still looking pretty good. OMC, this is Omnicom Group. Beautiful move up. AD line looks awesome. Relative strength was very strong. We're just simply going sideways here as we consolidate. Overall, though, looks like one of the best media agency stocks out there. Moving on to Wednesday, Tesla. Tesla went through a rough patch earlier, actually in the fourth quarter of last year when it really got hit to the downside, but it's bounced back pretty nice. And look at the AD line at new highs, even though prices are still way down. I think Wall Street is using the opportunity that when everyone was panicking out of Tesla, they were using the opportunity to buy. Why? Well, we might find out tomorrow or on Wednesday. I wouldn't be surprised to see a good report coming out of Tesla. You can see the relative strength on Tesla has really turned here over the last 3 months back to the upside. Las Vegas Sands. I think this one looks really good. Some of them look good and others look really good. I think Las Vegas Sands is going to report some good numbers here. AD line, strong, beautiful move up here. Sideways consolidation. It just looks like it's ready to break out. Relative strength, very strong versus the gambling stocks. It just pulled back while it's consolidated a little bit, but it's actually still pretty close to a 52-week high. And look at gambling stocks. Gambling stocks have been strong. A little bit of relative profit taking the last 45 days or so, but generally that's a nice uptrend. So you got a leader in one of the best performing groups in 2023. I'd be shocked if they don't have a good number. EFX. This is in the business support services area. Another one with a great AD line. Super strength, a lot of relative strength. Pulled backs, held this prior low so far. I wouldn't be surprised to see this move back up through 205 and start rallying. Could start with earnings. EDU. There you go, higher AD line. Another one consolidating. Big move up on a relative basis. This is in specialized consumer services. I think EDU looks really good. RLI, move up, sideways consolidating. AD line strong, relative strength strong. It's another one I think looks really good. Moving on to Thursday, tobacco stock, Philip Morris. Big move up, still looks like a lot of accumulation with that AD line moving up. Look at it relative to tobacco, near 52-week high. Tobacco, not exactly hot, but this is one of the leaders. So we'll see whether or not it holds its own. CSX, railroads have been horrible, but CSX actually been holding up, going sideways here. AD line just so-so. But look at the relative strength. Again, if you're looking at railroads, you might want to focus on CSX. It's one of the best performers on a relative basis going into its earnings report. DHI, this is a little bit technical and a little bit of a hunch. But the AD line remains strong. Beautiful strength and leadership among home builders through January, February. And then when it topped and started going sideways, you can see that it underperformed. But the overall group remains very strong. I wouldn't be surprised to see a gap up with earnings on DHI. We'll see. I expect good numbers. We'll see what the reaction is. PPG Industries just broke out 52-week high. It's in this bull flag. Nice bull. There's the flagpole. Here's the flag. AD line strong. Relative strength very strong. The specialty commodities group as a whole, not very good, down near 52-week lows. But this is your leader in the space. So we'll see what happens, see whether or not that leadership translates into a beat. IRDM, this is Iridium Communications. And this is in the wireless area. Look at the beautiful uptrend here. Great AD line, relative strength, super. And again, the group overall not good, but here is your leader in the space. AutoNation, I think this is going to be another one that's going to have a good report. Really, really big move here from 100 to 155 in 2 months. Volume going up, AD line soaring, relative strength soaring. And now it's kind of gone through this period where it's kind of given up a little bit. We probably could put a Fibonacci on here from the low to the high. Looks to me like we're probably at about the halfway point coming back down. I think we're starting to roll back up. I wouldn't be surprised to see a good number in a gap back to the upside. And then on Friday, I think our best earnings could come out on Friday. Most of the companies reporting on Friday look pretty good to me. Procter & Gamble, AD line looks good, trending higher, relative strength, 52-week high just hit. SAP, software stock, been trending higher, AD line looks great. Sideways consolidation on a relative basis, but the group is strong. So it's performing along with the group. I think this could be a very strong report. HCA, this is in the healthcare providers. AD line strong, price keeps going up. And there's your relative strength, strong. And just like I showed you with the UNH chart, healthcare providers not doing very well, but here's one of your leaders. So I think HCA looks good. Schlumberger, a lot of the energy stocks have lost a lot of their luster and their shine. But Schlumberger has been holding on pretty well. After moving up, we've seen some sideways consolidation, but on a relative basis, we're near a 52-week high. So we'll see, but this is a stock that I think looks poised maybe for a nice report. FCX, this is in the materials area, Freeport McMoran, FCX, AD line strong, not too far from a recent high, which I think is good. When you look at the relative strength, this is kind of a weird relative strength chart, but FCX is basically non-ferrous materials. So it has a massive influence. The stair step right there, I'm pretty sure is just dividends. Looks like every 3 months. So it's probably just the dividend on FCX. Last one I have for you on the positive side for this week, ALV, Autoliv, AD line soaring, relative strength 52-week high. The group, auto parts, been going down a little bit, but this is one of your relative leaders. So just to summarize, when you look at these stocks, I look for relative strength. If Wall Street's buying these stocks heading toward their earnings reports, then I would be expecting pretty good news, at least relative to the ones that don't look so good. And by the way, the last 2 quarters, maybe 3 quarters, I've been following a lot of these stocks when I go through and I say, this one looks good, this one looks good, this one looks good. And then I go back and I say, this one looks bad, this one looks bad, this one looks bad. We go back and we basically summarize the study to see how accurate it was. And I can only tell you at this point, I don't have the numbers with me, but stocks that show relative strength going into earnings have a much, much greater chance of reporting numbers that are better than expected. Now, again, it doesn't always mean we're going to gap up. That's what makes holding into earnings so crazy. Sometimes companies come out with horrible news and they gap up. Sometimes they come out with great news, they gap down. There's no rhyme or reason. I do think companies that beat and do it often over time are companies worth watching and maybe owning for the longer term. That's how ultimately a stock's going to be valued based on what it actually does and its performance and how management executes their business plan. I mean, I think that's the bottom line, and that's kind of near and dear to my heart. Being a former practicing CPA, you know, part of my job was evaluating management. And so I don't know if there's a better gauge than with a public company, the stock price. I mean, if you do your job and you execute, you have great vision, chances are stock price is going to follow you higher. And so I think relative strength is a really key piece of this. All right, so let's now take a look at the ones that do not look so good. A lot of these are in the financial space. I'm going to sound like a broken record saying, okay, this one looks like it's beaten up, relative strength, not good. So I'm going to go through these pretty quickly, but you'll see, I think, rather easily what's been going on. Here's Schwab. So Schwab reported today, gap down. It rallied into the close. Maybe it rallies a little bit further, but I do not like what's going on here with Schwab. Since all that crisis started, you can see the big drop in Schwab, but we've seen a rebound, and yet on a relative basis, Schwab has set another new low. So you might look at it and say, well, yeah, it's bouncing. Well, it's not bouncing much. It's not bouncing as much as the overall group because its relative strength keeps declining. I'd be leery of these moves to the upside. In fact, you know, if I was in it, any kind of reversing candle and I'd be out. Failure at the 20-day, I'd be out. Let me see it. I need to see it first because we got some really poor relative strength. How about MTB? Another bank here, M&T Bank. Look at the relative strength, just continue to go down, set new lows. That's what you have to, I think, be very careful of. When these companies, these banks report, I think it's like walking on eggshells if you're holding into these earnings reports. Some will probably be great, you know, reaction. Some of them probably not so much. Anyway, Johnson & Johnson, we saw the recent gap up. AD line took a little bit of a pop. Relative strength moved up a little bit, but look at just the consistent downtrend in relative strength for the last year. Maybe this is the start of an uptrend. I mean, you can kind of see that, see the AD line. So maybe earnings will come out strong and we'll get that move to the upside. I would just be careful. Makes me a little nervous based on what I'm seeing here. Here are some banks that I was referring to. How about FHN, First Horizon? There's your big bounce, but you're still in this overall downtrend. All that selling on heavy volume, and then you're moving back up on light volume. Look at this gap, big gap resistance. We're getting right up to the bottom of gap resistance. I wouldn't be surprised to see something like this just roll right back over. CBSH, Commerce, still sitting down near new 52-week low. It looked like it was showing some relative strength when the crisis started, but now it's completely fallen apart again. So I'm not really liking that one. WAL, which is Western Alliance Bancorp, another one. Big drop, huge drop in relative strength. I mean, this stock went from 75 below 10. Now it's back up to 35. I'd be careful. I wouldn't be surprised to see another rollover. HWC, this is Hancock Whitney, is another bank. Big move down, hardly any bounce whatsoever. Look at the relative strength, just continuing to push lower and lower. Next up, USB. This is on Tuesday. Moving down, another bank. Relative strength down here, still down at a 52-week low. CFG, it's a Citizens Financial, another bank. Look at the relative strength just continuing to deteriorate here. SYF, this is Synchrony Financial. This is actually in consumer finance, but relative strength is horrible, hardly getting any bounce there. We've gotten a little bounce in absolute price, but not relative strength. So all that's telling me is that the overall group is bouncing a little bit and SYF's going for long for the ride, but it's not leading. You want to be careful with stocks like that. FFIV, move over into the telecom area. Moving down, I mean, we've been going sideways, but this is a stock that I would have thought would have benefited from the big 2023 rally. We haven't seen it. I mean, literally, we're sitting almost exactly where we were on December 31st. No bounce at all from where we were 3.5 months ago. Relative strength continuing to deteriorate. Probably going to find out what's going on with earnings. Zion, another bank, moving down. Look at the relative strength, setting new lows. Not good. CNS, this is Cohen and Steers. This is in the asset management group. Asset managers. Look at the volume trends on this move down. Very poor. Had lighter volume on the way up, and then the volume accelerates as we move back down again. Now, it doesn't look very good to me. LBRT moving into energy. Look at the relative strength or weakness in this case, 52-week relative low versus its peers. SLG, this might be the worst looking chart out there. I mean, this SL Green Realty, this just looks awful. It was $70 a year ago. Just hit in the teens, bounces up to the 20-day right before its earnings report. I mean, I think we'll probably be back down here at 19 or so after earnings. I wouldn't be shocked. And then we'll see whether or not we can hold that low after earnings come out. But look at the relative strength here. So it's in a very weak group that just set a 52-week low, and SLG is setting 52-week lows versus that group. This is the exact opposite of what we would want to own. We want leading stocks and leading industry groups. This is a horrifically lagging stock in a horrifically lagging industry group. Cannot imagine anything good coming out of this report. All of this selling right here. Look at the volume that accelerated. Now we're getting this little dead cat bounce. I don't know. I got a feeling not going to be any good news coming out for SLG. Next up, moving to Thursday, NUE, Nucor. This is one, you know, we haven't lost any major support. AD line's starting to roll over, but NUE now is getting closer and closer to a 52-week low versus steel. And steel is kind of, you know, it hasn't rolled over as much as some of the other material stocks or material industry groups, but it's starting to look not so great. And so NUE is kind of one of those. This will be an interesting earnings report, I think, because it's starting to show weakness in terms of relative strength. But its group is still kind of clinging. Like you can see steel, massive outperformance all the way up to the beginning of March. So is this just a relative period of profit taking? We're going to turn back up, or have we topped? I don't know, but if we've topped, then I don't like what's going on here with NUE. FITB, another bank. Straight down, huge volume, coming back up here a little bit, but relative weakness still tells me be really careful. WRB, this is WR Berkeley in the insurance area. AD line going down, price going down. Look at the relative weakness for the last 6 months. Just awful. And the group itself is starting to roll over. Just not where you want to be right now. Key, I think this is another bank. Key Corp, big move down. Look at the relative strength drop. And then here we are still down near the 52-week low. So when you see it continue to hover down close to the 52-week low, it's just telling you Wall Street's not seeing this as a bargain. It's continuing to just kind of perform along with its bank, the other banks. And actually, after this little bit of a bounce, it started to roll back over again. Just doesn't give me very good feeling. EWBC, another bank, same thing. This one setting a new 52-week low, though. Just not very good there. WBS, almost done here, by the way. WBS, same thing. In the banking area, big drop, $56 down to $36. Still down near the lows. 52-week relative low just hit last couple of days. And then the last one I have for you is CMA. This is Comerica. Another drop. It's another bank. This used to be all the way up until maybe September of last year, pretty decent looking bank. And then it started showing relative weakness. Then when we had the crisis, big drop, and it's still hovering down near that 52-week low. So I don't know, might have some not so great news that it'll have to recover from. So at this point, what I would say, and I told members earlier today, for me, it's getting rid of a lot of the leverage. I just think the market, you know, because it is opposite George week, options expiring, a lot of the things that have carried a lot of the companies that have carried the QQQ higher are now looking at options, you know, staring at options expiration. Many of them with in the money, net in the money call premium. So it's just a dangerous time. Anytime, I don't want to be in leverage when the market is, it could be volatile. I want to be in leverage when I feel like the risks are on my side, when I have more reward potential than risk. And when you go into a week like this, I think it's just littered with risk. And so I'm long in the market. I'm remaining long because I don't know, market could just continue taking off. Bull markets sometimes make no sense. They just go up. And I believe we're resuming the bull market. So I'm always going to be invested on the long side at this point, unless I decide that something has changed in the market. But I pick my spots for leverage. And right now, we're not really looking at a whole lot of great company reports that are going to be out over the next week. I mean, I do like Netflix a little bit, Tesla. Those are two that could lift something like the QQQ. But, we've had banks that have been beaten up so badly. Are we going to get a little bit of a bounce, a little rebound during opposite George week? It's what's been happening so far. So I don't know. I think this is just a really tough week to try to trade. And, today's the 17th, tomorrow's the 18th. Told you earlier, the 19th to the 25th is the worst time of the calendar month historically for the stock market. And again, options expiration week. I just think we have to be a little careful here. But that's what I had. What we're going to do, we'll have another earnings webinar like this one for our members next Monday. It is for our paid members, though. And I'll be looking out much further into earnings season and taking a look at a lot of aggressive growth stocks. I think that one's going to be really interesting session. So if you like what you heard here tonight, or follow these stocks this week, see how they do. The ones I said that were strong, see how their reports come out. Did they beat earnings? Did they not beat earnings? And the ones that look really weak, how did they do? Did they beat? Did they miss? Did they lower forecasts? But if you like it, make sure you sign up. And as John mentioned, we do have another webinar tomorrow. That's our model ETF portfolio draft, where I will lay out everything. I'm going to go through all the themes, the things that I think about in terms of picking ETFs for a portfolio. And then we will lay out the actual ETFs that will be in our portfolio for the next 3 months. We have beaten the S&P 500 now in our model ETF portfolio for the last 5 quarters. So most portfolio managers can't beat the S&P in a year, and we're doing it pretty consistently. So you may want to check that out. And then lastly, what I wanted to do was to pull up the webinar special. Again, for anybody in here tonight or listening to this on a recording, if you go over to our website, click on that webinar special. If you want the annual membership, this is a great time because you get 2 bonus months. So you're already saving a lot. I think if you pay $147 a month, which is our normal monthly rate, you're talking about something like $1,800 or almost $1,800 for the entire year. So by doing the $997, you're almost cutting price in half. And when you throw on the 2 bonus months, you literally are saving more than 50% off of our regular monthly rate. So this is a great time. If you like what we do at EarningsBeats and you want to give us a shot, we've done some tremendous hand-holding through a very difficult market over the last year or two, actually 3 years, going back to the pandemic. I think we're well worth the cost, but give us a try and see what you think. John, I don't know if we have any questions, but I'm good.
Yeah, just a couple real quick. Somebody's asking if the charts will be posted. I don't know if this is an annual benefit, or I don't know if you're posting the charts you talked about today.
I haven't set up a chart list, and it's such a busy week. I don't even know how I could get to it. So
all right. If we do it, we'll let you know. But for now, there's too much going on, I think.
Yeah.
Second thing is the RS, relative strength you use. This is like a statement. I don't know. The relative strength you use is not the built-in RS on most platforms, is it?
No. I mean, if you're talking about RSI, relative strength index, no. The relative strength I'm talking about is comparing to one symbol versus another symbol. You're just looking to see how it compares to something else. Could just be a stock. It could be its industry group. It could be the S&P 500 or some other benchmark. The RSI is a momentum indicator. And all that's looking at is where a stock is trading relative to how it's been trading the last 14 days. And it has nothing to do with relative strength the way I'm using it in this session.
All right, let's wrap up. Somebody just asking if you could pull up ISRG. What do you think about that one?
Yeah, I looked at that one. That was one that I didn't really have strong feelings. I mean, I love the AD line. That looks really good. It showed a lot of relative strength back in October, November, and then kind of, went through a period where it declined. Now it's starting to strengthen again. I mean, if I had to guess on this one, I would rather be long than short going in. And that's generally, I would rather be long than short anything, just based on the way I feel about the overall market. But looking at this chart, it has been, moving back up again. The AD line looks like it's under accumulation. So if I had to put it in one bucket or the other, I would probably put it in that bullish bucket. I think ISRG looks good, but that just tells me it's going to have a good report. Not necessarily you're going to get a gap up. So Be careful.
All right. That's it.
Yep. All right. Appreciate everybody tuning in. And again, tomorrow night will be the draft for the portfolio, the ETF portfolio. Next month.
Hey, Tom.
Yeah.
Let me clarify. Tomorrow night's Max Payne. Wednesday's ETF.
Yeah, I'm already lost. Got so many things going right now. Yeah. Max Payne tomorrow, ETF on Wednesday. And then next Monday will be our Q1 earnings. This is just kind of a little sneak preview of what we do. Then when we start doing, when obviously earnings season is going to explode here over the next few weeks. So we spend a lot more time doing what we did tonight for our members for the balance of earnings season. So hopefully check us out, 30-day trial, or take us up on that annual special. I think it's a great deal, and certainly one of the best deals you're going to find here at EarningsBeats. With that, I'll wrap up. Everybody have a great evening. Happy trading.